Welcome back to another episode. Sorry I haven't posted in a while. I'm hoping to do one on a weekly basis going forward. However, this episode is all about the S&P 500, and it's a question that I've got off for a number of people, so I thought it would be easier just to answer it on YouTube. So the question is, why has the S&P 500 fallen around 7%, 7.5%, 7% in the last month versus Vanguard ETF, which is an ETF of the S&P 500 that a lot of people buy in the UK using their tax-free ISA. Why has that fallen 10%? So you've got the same 500 companies, essentially, same S&P 500. Why has this fallen, 10% essentially, compared to this 7%? And it's a really good question that I'm going to answer today. And if you've not noticed this, it's also good to listen as to why this has happened and what may happen going forward. So to understand what's going to happen and why it's happened, let's going to look back first of all for the past 6 months. So we had Trump's inauguration in the last 6 months. So he got voted in to be president of the US. The stock market then went on a big rally, so we can see around here he got voted in when Vanguard was £84 a share. It went on an enormous rally and essentially gained 10, 12% within a few months because the American stock market liked that Trump was in, liked the prospect of growing underneath him. So he ended up getting inaugurated, and then he got inaugurated, and one of the first things he has done is said he wants to increase US manufacturing. So that means manufacturing of goods in the US. And to encourage US companies to do that, he has imposed tariffs. So he has imposed tariffs on Europe, China, Canada, and Mexico. And these tariffs are designed to make an increase, they make cost of goods coming into the US more expensive, thus incentivizing people to manufacture in the US. So I'll just say that again. So if basically goods are coming into the US now that used to cost, say, £1 and it has a 10% or 20% tariff, they now cost £1.20. So it's more expensive for the company to get it made overseas because they've got to bring it into the US. Now, companies can either then pass on that additional 20% or 20 pence or whatever it is to the consumer, or they can absorb it in their own profit margin. And we don't know what's going to happen with that yet. But what we do know is that it's not good for Americans. And I listened to quite a good podcast recently, and there was a quote on it that I fully agree with, which said that Trump is using 20th century policies in the 21st century, and how we now live in a global economy, and they don't think this will work, and it's just not really a very well-informed move. But it's not for me to judge what they're doing. It's for me to just react to the market and make good decisions. And I can make another episode on why potentially it's not a good move from an economy point of view in another episode. But since the tariffs came in, there's fears that this could push up inflation in the US, that it will damage the US economy, and therefore stocks are sold off. All stocks have sold off. The Magnificent Seven are down around 20%. Tesla, Nvidia, Microsoft, Google, Apple, all down, massively down. And it's reflected in the S&P 500, which is sold off. So in the last month, it's sold off 7.5%. So that explains the fall. Now, if we think about why is it 10%? So why is the S&P in Vanguard 10%? It's because of the currency exchange. So if we look at the last month, in the last month, the currency from the US dollar has weakened. So let me say that again. So the currency has weakened. So you can now buy more dollars with the same pound, or in vice versa, $1 is now worth less than it was previously. So 3 months ago, it was worth as much as 0.82 UK pounds. Now it's all the way down at 0.77. So that's a good 3% loss in the last month. And so if you add on the 7% and the 3%, we get to 10%. So the difference is this currency exchange. Now you might ask, why has the dollar been weakening? So normally in the past, when these sanctions or these tariffs have come into effect, people have sold their money and they've gone to buy US bonds, because US bonds are very safe, low returns, but very safe. People really like them, companies like them. But due to basically Trump and his unstable policies and no one knowing what he's going to do from one day to the next, I heard him be described as a wild dog. You don't know what they're going to do, whether it's going to bite you or whether you're just going to pet it nicely. Investors aren't buying bonds in the US. And if they're not buying bonds in the US, they're moving their money out of the US. And if they move their money out of the US dollar becomes weaker. Now, again, there's been some speculation that Trump may want a weaker dollar, which I can talk about in another video. But what it means for all of us is that anyone who already had money in dollars, it's now worth less in pounds. So when we look at it on our app, or we look at it on our side, we've lost money versus pounds. So we've not lost dollars, we've lost pounds. And so when it appears on, say, Trading 212 on the app for Vanguard S&P 500, we can see the last month down 10% compared to an actual 7% loss. So hopefully that explains what's going on. I'm sorry I've not made a video in a while. Going forward, I plan to make one about how I've done this year, so how I've performed so far this year versus the stock market, what my picks are going forward, why I was right about Tesla. So I made a video at the end of last year about why you shouldn't buy Tesla. And I mean, I think you shouldn't still buy Tesla, even though it's down nearly 50%. So yeah, look out for more stuff and speak soon.